Welcome back to another episode of NextGenDDS. I'm Dr. Scott Menaker, here with my partner in crime, Mario Santiago. Mario, great to be with you again.
Oh, great to be here with you, Scott. Excited to talk about a couple different things today.
Yeah. So the big one that's we've talked about in this part of our series, kind of the debt, good, the bad, the ugly, some good debt strategies, bad debt strategies to avoid. And today we really want to talk about, I guess, the big one that's really looming today for many people could be current is student debt, whether it's for current students or sometimes even students, doctors that have been out of school for a while who are no longer students but are still carrying that debt.
Yeah.
And we want to really talk through that with you in terms of how do you treat it, how do banks treat it, maybe when you're going to buy a practice. And there's different ways. We're not going to get into the specifics. I know Mario can get a little confusing with all the different plans and what you do. Maybe you can hit on just what some of those are.
Yeah.
But we're going to kind of take it from here and hopefully answer your questions.
And I think this is a good one, Scott, to independently do an episode because, is student loan good debt or bad debt, Scott? What would you say?
I'd say it could be a little bit of both, probably. There were a lot of schools that were coming out, these for-profit schools for a while. Hey, it's going to be free government loans that you're going to get this free. The government's going to forgive the loans and all that. And the schools go bankrupt and you end up with a degree that you can't use. So that could be the bad student debt.
I bet you can make that argument about a bunch of different degrees too.
For sure. We don't have time. We're not going to go into that one. We think the dental degree is a great degree to have.
Yes.
You're setting yourself up for a career that's in a great place. And sometimes to get that degree, it does require student debt.
Yes. So if the decision is, should I become a dentist or should I not become a dentist because I have to get into debt, we would lean towards, yeah, it's worth it. But there's always the depends, right? Did you rack up $700,000 of student loan debt and then you don't really have a good plan to pay it off, or are you going to get a return on that degree? Then maybe we didn't need to do that.
This is a pretty funny story.
Yeah.
From dental school. I had a guy that we finished our first year of dental school, and we had one of the students was one of the older ones. I went out of school straight out of college, so I was 21. I was a little puppy. I looked probably like I was 12. But Tom had been an accountant for about 12, 13 years in a smaller town in North Carolina, was doing really well and just wanted to be a dentist. And so he was giving that up and was going back to school to become a dentist. Had done well his first year. And over the summer of his first year, one of the accountants from the firm that he had been in, there were two accountants who were in there that were partners. One of them had a heart attack at a young age and died.
Oh my gosh.
And they didn't really have a plan of what they were going to do. And they made Tom an offer that we want you to come back to be a partner in the firm and go back to running, help me run this. And he said, I don't want to do that. And they said, tell us what it'll take. And he gave them a proposal, and they took it. And I think they made him a partner. They paid him whatever his salary was going to be. They helped buy him a house. He said, by the time I added it all up, it just, I liked being an accountant, so I was going to go back and do it. So he gave it up.
Yeah.
But he saw he was going to do something that he liked. We thought he was out of his mind, but it just didn't make sense. And probably it made sense to him financially because he had done he was an accountant. He was a financial guy. He had made he understood what it was going to mean. He said, I'll never recoup this. And I like being an accountant. So, you've made a decision. The dental one, you probably haven't given up a lucrative career.
Well, I want to hear from you, Scott, in terms of, let's say, deciding where you're going to go. And I'll tell you my perspective because it's going to probably be very different from the clinical perspective. I'm guessing there are better programs than others as it relates to dental schools, specialties. However, I will tell you from experience that the guy or gal working in the middle of nowhere who went to the dental school I've never heard of, they're making plenty of money.
That's correct.
And
I would agree.
And they didn't rack up a ton of student loans. So I just want to hear from you,
Yep.
like, hey, when is it worth it to rack up tremendous amounts? And I'm saying this because I know that there are some residency programs, right, that you're still paying to be part of that residency program, or you're incurring debt
You might
to
be getting a little stipend, but
Yeah.
it may not be enough. Yeah.
But-
So I think, and I get faced with this sometimes because I talk to a lot of students before they become dental students that are looking to do this. And they're like, you've got a lot of for-profit schools now or private schools that it's going to cost you probably $100,000 or more a year between tuition, sometimes just for tuition, but sometimes now the tuition and living expenses over that 4-year period. And you're going to come out of school with anywhere from $400,000 to $600,000 in student debt. Now, that doesn't sometimes even relate to, do you have student debt from undergrad, which a lot of students will have as well. I think you have to be careful that all of a sudden you just don't become so encumbered that all you're doing is paying back debt. Because I used to call my oldest son. I helped him a lot through undergrad and then some through medical school. But I felt like he needed to have some skin in the game, and so he had to have some student debt when he went to medical school. And I said to Nate, I said, "You're going to own a house you're never going to live in." And he was like, "What are you talking about?" I go, "Well, you're gonna have a couple $100,000 of student debt that you're gonna have to pay off." Which, think about it as a very small house that you're just gonna pay. You're gonna be paying a monthly payment on this thing, and you're never gonna live in it. Now, today that number, unfortunately, continues to grow. School tuition keeps going. It's gotten more competitive. And students are coming out of dental schools with, I hear it a lot as I talk to students. If somebody tells me 200-300, I'm giving them high fives over the phone because that's a pretty low number. I've heard 600. That's getting, it's making me squirm a little bit. It's still can be done.
Yeah.
And then I hear some that are over, getting close to $1 million. And those are the ones that I'm scared for them. Because that's just going to be a big hole. Now, you can dig out from under it, and you can do it by buying. You can even do it buying a practice, and buying an office. You can still do all those things. It's just going to potentially be a little more challenging.
Yeah, and we've always harped on, look, the way to pay the debt the fastest is by buying a practice. But I would argue that becomes even more the case when you have student loans in the $800,000 range. Like I had a doctor the other day where both him and his spouse went to dental school. He became an orthodontist, and she ended up not practicing. So they racked up close to $1 million together in student loan debt. But he bought an ortho practice and is aggressively paying it off, and they're going to be fine because it's a high income practice. So it's definitely possible, but more reason to go out and get your own business and increase your income to pay it
So
off.
when you're talking to docs about student debt, and I know we're not going to get into the specifics of it because there are lots of different ways to go approach it, but I get asked the question, I'm sure you do. So what should I do with my student debt? Should I pay it off? Should I, the government had it just recently in the 2020s, the deferral of student loans coming out of COVID and whatnot. And so what's the take that you're giving clients and doctors and students that you're talking to about student debt? Because it's something that they need to think about.
Absolutely. And I think the important part about this one, Scott, is like, it's not a one size fits all approach. If you're just listening to a podcast like this and you think this is going to give you exactly your plan, you really need to take a deep dive at your own numbers. How much debt do you have? What's the interest rate? What's your income? What are your other expenses and your other debt? How old are you? All these different things factor into that. And I'll give you a good example that I think will answer that question, because there's the financial answer, which really the financial answer is, based on that interest rate, let's say I'm just going to use 5% as a number. Do you think you can beat 5% by investing money in the market? And if you look at the overall history of the market, you should be able to beat 5%.
On average,
yes.
on average, yes. Over a period of time, absolutely.
Now, if you're pushing, 9% on your student loans, that's where we start thinking, okay, you could get a guaranteed 9% rate of return by just paying them off. So that's where the interest rate comes into play, and investing comes into play. Now, if you're just sitting on cash and you're not going to invest at all, then you might as well prepay the loan because your money's doing nothing. But that's from an investment standpoint. That's the financial answer. And financially, generally, it makes more sense to actually pay your student loans over their original term and invest the rest. Now, there's the emotional answer. A lot of people graduating, the first thing they want to do is they want to pay off these loans. It's stressing them out. It's stressing them and their partners out.
Do they normally get a grace period, or is that it just depends on the loan?
It depends. Like there's some, for example, there's historically been like income-driven repayment programs where, hey, if your income's on the lower end, but then it shoots up, the payment's going to be based off that. Yes, you saw a couple years ago.
That's a good point.
Yeah,
Right,
there were a couple of forbearance periods that kept being extended. And look, the savvy doctors during those periods where interest wasn't accruing, they were paying off principal, for example, really aggressively. So that was a good idea. So it really depends where we are, but sometimes you're expected to start paying. It depends on what kind of loans you have. There's a ton of different federal programs.
Yeah. And now I'm seeing something on TV. I think one of the WNBA basketball players is trying to sell this refinance thing of student debt.
Refinancing can be a good idea too. So once again, depends.
I get a little scared when I'm seeing that on
TV.
A company trying to sell that to you. So because they've got to make money in that, correct?
Yeah. No,
everybody's got to make money. So
yeah, someone's making money, but let's say refinancing to a private lender. I've recommended that multiple times of, hey, someone's got student loans at 9% or something on the federal level for some reason, and refi rates are at 6%. If their cash flow is high, so if they're making a ton of money, and they will get a lower interest rate if they get a shorter term. So for example, this other doctor that I was talking to you about, they had so much cash flow, they were going to be able to pay it off in 5 to 10 years because that's what they really want to do. And they were able to bring down that rate to something really low because they picked 5 to 10 years. And now they're going to save a ton on interest by really refinancing. Now the cash flow has to make sense, right? Can you handle that higher monthly payment for the student loans? On some other occasions, hey, we might still refinance to private over a longer period of time, but if there's that interest rate gap, right? If you were at 9 and now you're at 7, it may make sense. Now you have to keep in mind, you lose any sort of federal benefits that come with your federal student loans. Now, whether you think those benefits are actually going to become true,
some of those? I'm just curious.
Some of the programs might give you forgiveness over a certain period of time. Like, I think one of the programs is like over 30 years or something like that. Now, if you actually think student loans are going to get forgiven, that's another debate.
Yeah, right, sure.
Another one is how much interest did you pay over that long period of time, and how much are you going to get forgiven at that point? Right, so you're
taking a much bigger risk, right?
Yes, so you need to run the numbers, but just keep in mind that if there are any sort of federal protections or federal things that you're looking for, you're going to lose them if you go to private. Another thing, it's like if you pass away or something, on the private side, there might not be protections of, hey, your spouse might have to pay that loan back, or some of the federal programs you may be covered and that might be paid off. So you need to look at the devil's in the details of all these different programs. But in terms of paying it off over the long term, I'm just going to tell you the ideal scenario, Scott. So had 2 doctors, married dentists, and they had student loans, and their goal was, we want to pay this off ASAP, in the next 5 years. And they were working as associates. And so I asked them, look, is the plan to continue being associates, or do you see practice ownership in the future? And they did see practice ownership in the future. They want to buy a practice in the next 3 to 5 years. But they were kind of thinking of it backwards. They were thinking, how do we prepay this loan or these student loans as fast as possible so that then we can feel comfortable about taking on more debt and buying a practice.
Right.
And on the same note, we talked about the house, right? How do we pay off the student loans and buy a house so then we can buy a practice? That's really backwards, Scott. What you really want to do is, how do we put ourselves in the best position to buy a practice as soon as possible? Because if you buy the practice as soon as possible, you're going to increase your income. If you increase your income, you're going to be able to afford that house that you want. And look, I know I said that generally I recommend you just pay these loans over, let's say, 20 years over their original term. But if you're making more money as a practice owner and you have enough to save and to spend, I'm the first one to tell these doctors,
Sure.
Go ahead, prepay the loan over the next 10 years. But now you have the income and the cash flow to do it. Yeah. If you start prepaying it right off the bat, I've ran this number multiple times. It's actually part of the presentation we give to residents. I compare two students. One who pays the student loans off in 10 years and really sacrifices saving in those first 10 years, but then they start saving really aggressively in year 10. And then I have another student who starts saving from day one, pays the loans over 20 years, but saves a little bit over those 20 years versus the other student who saved aggressively over the last 10 years. Who does better over time? The student who started saving now. Right. And pays the student loans over 20 years.
It's kind of counterintuitive, right?
Right. It's just compounding. It's like we've talked about. If someone starts saving for retirement at age 55, they don't have time on their side.
There's no time.
If you start saving for retirement at age 30, 20 to 30 years of compounding is going to make a huge difference. And even if you have the cash flow, I had another doctor who he's probably in his mid 30s now. Great practice, really high income. He could pay off the student loans in probably 2 years if he wanted to. But when I showed him that if he just continued to pay them over the original term versus paying them off, the difference in his overall outcome when he wanted to retire was about $7 million in the investments.
Wow.
That made them change their mind. They said, okay, we're going to just keep paying.
That's pretty staggering. Yeah.
So you just want to run the numbers.
Everybody... I know my tact was always, I hated interest.
Yeah.
Interest was just this. Now, I borrowed a lot of money on interest over time, but I just never liked the fact that it was the fee to borrow. It was just this added fee. But on occasion, like I kind of indicated, I've got a second home loan at less than 3%. I'll never pay that off.
Yeah, and that's just free money.
I'm 66 years old, and I've got another 27 years on that note. I'm never going to pay that off.
And that's why you always ask, do you think you can beat 3%?
I sure hope so.
You sure hope so in the market, right?
Yeah,
right?
That's right.
So, yeah, it all comes down to the interest rate. It comes down to your personal cash flow.
Yeah, and I think most people kind of we're all looking for the quick, simple fix.
Yes.
And I think we keep trying to reiterate, no matter what we do, that and no matter almost what topic we talk about, that you need to take a personal, individual look at what you're doing.
Yeah.
And then from there, then you can make an informed decision. Somebody could help you go, like you said, no, you're better off investing it now. No, you're better off paying it off now.
Yep.
Those things I think are just, we really want to leave you with that. More, we'll keep repeating that over and over.
Yeah, you want to plan.
So, the student debt is not so bad. It's a means to an end. You're going to have to pay it back. And when you do it and how you do it, you need to have a good plan to do that. The one piece that I did want to mention as I was thinking about this is, if you're going to go buy a practice, one of the things that banks may want you to have is a little bit of liquidity.
Yeah, so I was going to ask that, Scott. In terms of student loans, how much do students have to put in or graduates have to put in down as a down payment for a practice?
So I'll give you just an example. I've got a doctor buying a practice. He's buying the practice and the real estate. Almost $2 million for that. He's got student loan debt.
Do you know about how much?
Probably about $300,000.
Mm-hmm.
The bank's going to loan him full 100% on the practice and the real estate.
So no down payment.
So no down payment. And sometimes what'll happen, what we're seeing is sometimes they'll make the doctor carry back a secondary note. So the bank may do 80% and the owner doctor is going to have to do 20%.
Mm-hmm.
I like to keep them neat and clean. If you can't do it, great. It's no problem if you've got the right doctor.
Yeah.
But the bank did want him to have some liquidity. And he said, well, I could put that money up and I could pay down the practice note. I go, hang on. If they just want it in the bank account, then you're okay. And in this case, they were okay with him having, he had put some money away.
Can you define liquidity, Scott?
So typically they could say, depending on the loan, they may want you to have 5 or 10% liquidity. So on $1 million loan, they may want you to have $50,000 to $100,000 of money somewhere, whether it's in a savings account, an investment account.
And generally, it's non-retirement, right? It's got to be like a brokerage or cash.
That's typically correct.
Yeah.
You know, banks can sometimes start to get a little creative, or at least the lenders will. The underwriters probably not.
Yeah.
Because, you know, you may get a lender who says, oh, no problem, no problem, I got this. Oh, yeah, it's no problem. And then underwriting comes back. And the underwriting is a whole different group of people who are basically saying, do we think what's the likelihood this is going to get paid back?
Yeah.
And what kind of either guarantee or liquidity thing do we need to have to kind of guarantee that?
But there's a reason they're financing 100% of a practice purchase, even when you have student loans. It's because the default rate on dental practices is astronomically
very,
low.
very low.
I mean, I always joke, there's a reason you go to the big dental conferences all around the U.S., right? Who's at the dental conferences? The banks, right? The banks want to invest in a dental practice.
And that's why the DSOs have certainly become popular, and the private equity groups. The return on investment, even after payment, you know, and we could spend a whole thing talking about DSOs and how they fund their bank, their go rate. But basically it's around they're borrowing and paying only interest.
Yeah.
Okay. And when interest rates were 3% and the margin, even after expenses, was 20%, will you take a 17% return on your money? All day and every day, right?
Mm-hmm.
Well, interest rates have gone up, so they're now borrowing maybe closer to 8, 9, 10, 12%. Mm-hmm. That margin's gone down.
Yep.
And so that's where you've seen some of that flux. But everybody's gotten into it because of the margins that dental practices have, even after doctor salaries are paid. So we might have to have a chart to draw that up for an episode. But
yeah, big takeaway is just, look, every situation is different as it relates to student loans. But generally, the answer lies somewhere in the middle of, look, let's not prepay the student loans at the expense of saving at all. Let's not only save and ignore the student loans. The answer usually is somewhere in the middle of let's save and pay off the student loans, but also take into account some of the other goals that you may have, such as purchasing a practice, buying a house, things like that.
Right. And I think it's just the student debt is good. It's okay. How you treat it and how you take care of it and how serious you are about it is important. And so we just encourage you to, get good advice and guidance. Mario, happy to, I'm sure, have a chat with you about it, as will I.
Yep.
While I'm not a financial planner, we certainly understand what this can mean for you and how you treat that. And our goal, again, like anything, the reason we're doing these episodes is just trying to share a little bit of advice. If we give you one little thing in the back of your brain that just you go, I remember these guys were talking about this, then we will have done our job. Yep. So thanks for tuning in again. We look forward to continuing the discussion about money, and we wishing you all the best.